Good morning. It's Thursday, the 22nd of June, and I'm Govindraj Ethiraj coming to you from Mumbai, India's financial capital. Our top reports of the day. Elon Musk is great badge value, but what do we really get with a Tesla in India? A rocking party which ended in India buying some 1,000 planes in 2 days and a little more has ended. What comes next? Indian stock markets hit lifetime highs. What happens when you're at the peak and the view starts to get a little hazy? And some sad news, Amul Creator Sylver DaCunha passes away.
This is a core report with Govindraj Ethiraj.
Tesla, here I come. Sometime between May and December 1996, a little-known Korean car company called Hyundai incorporated and then began building a manufacturing plant in Irangukottai near Chennai in Tamil Nadu. The first model was called Santro and was showcased at the Delhi Auto Expo in 1998 and launched in September the same year. It looked odd, to say the least, with its tall boy design with a high roof line. This meant that you could get in very easily and get out. The only hitch was that the design was almost bizarre. The first time I got hold of one for a test drive, people used to stop and, well, laugh on the road. I am not joking. Shah Rukh Khan was the brand ambassador, and that made the proposition a little friendlier and perhaps less laughable. At 2.99 lakh rupees and a 999cc engine, it was soon flying off the dealerships and ran in various versions till almost 2015 when the i20s started coming in. Maruti, by the way, was pretty much the only competitor most of the way. In the United States, around the same time, Hyundai was also considered a laughingstock too, though more for its poor looks and because it had a reputation of breaking down. Stand-up comedian Jay Leno apparently once joked that you could double the value of a Hyundai by filling it up with gas. The turning point for Hyundai in America was a 10-year, 100,000-mile powertrain warranty. Several models followed for Hyundai, like the Sonata, which you may also remember from Indian roads, and things changed. Now, let's cut to the present before coming up to speed on, well, electric and electric cars. Back to the United States. Hyundai's Ioniq 6 has been largely a hit, even with critics. Gone are the days when people laughed at Hyundais. Not only have they stopped laughing, they seem to rave about it now. At the New York Auto Show in April this year, Ioniq 6 was voted Car of the Year. Asked last year about competition in the EV sector, or the electric vehicle sector, Ford Motor Chief Executive Jim Farley said, "The ones I am paying the most attention to are Hyundai, Kia, the Chinese, and Tesla. That's my list," reported the Wall Street Journal. Hyundai and Kia are considered siblings, and they got into electric in 2010 when Hyundai released the Blueon in Korea. The electric Kia Soul went on sale in the United States, Europe, and South Korea in 2014, and this was 2 years, by the way, before General Motors released its rival Chevy Bolt. Tesla first launched in 2006 on a small scale though. Now, interestingly, Kia and Hyundai are priced pretty close to the Tesla in the $40,000 plus range, and even in a market like India, price does not seem to be a disadvantage for the Koreans. Features vary, but a Kia EV6 goes head on with the BMW electric i4 in the 65 to 70 lakh rupee range. Now, this would have been unbelievable even a few years ago. The Wall Street Journal describes the experience of a doctor customer from Portland, Maine, who owned an Audi, wanted to switch to an EV, put himself on the waiting list for several, including the Ford Mustang Mach-E, and finally settled for the Hyundai's Ioniq 5 because he was apparently sold on the driving dynamics. Now, Hyundai has been in India for the longest, including in electric along with Kia. Toyota and Suzuki are now joined at the hip partly, at least to sell hybrids, and India's largest electric car maker is now Tata Motors with a close to 80% market share. All other companies, including the likes of a Volvo and the German car majors, have launched full-bred electric versions. So finally, before you ask me what has all this got to do with the price of onions, why indeed are we so excited about Tesla, a car I am not so sure most can afford? So 2 or 3 points as we try and break down what's on offer and what is not. Firstly, the electric car market is not what it was even a few years ago, and things have changed quite dramatically. So now let's come to India. Tesla's cars will start around 70 lakh rupees from what it appears today. If Tesla were to manufacture locally, prices would come down, but it's definitely not competing in the mid-segment, battery or no battery, and thus unlikely to sell beyond a few thousand cars in a year, unless some iPhone-like fever grips buyers and they would want one no matter what. As a car manufacturing base, a Tesla investment is not likely to be very substantial because no one really thinks of India as a car export base, though that is what is being discussed. For that, by the way, Tesla is already grounded in China and is scouting all over Asia, including South Korea and Indonesia, Vietnam, and Thailand, who are all vying for attention for electric vehicle and battery manufacture in general, with billions of dollars and billions of dollars more than India has already committed or seen committed. On the other hand, a Tesla gigafactory that makes batteries, units, power electronics, energy storage systems, and parts is something India could see and benefit from and is aspiring for. So, Tesla today has 5 gigafactories in Nevada, United States, New York, United States, Shanghai, China, Berlin, Germany, and Texas in the United States again. The term gigafactory seems to be a little broadly applied, including manufacture of cars, particularly in centers like Shanghai and Berlin. So now the big question is, can India be the host for Tesla Gigafactory 6? It is very possible. But at this point, there are at least 2 more contenders going by industry chatter. One is South Korea and the second, Japan, apart from India or maybe sequentially all. I'm of course referring to Asia. Now, this is obviously big, but there are many other investments into India in the battery and automotive space also lining up, and there are too many to get into. And this is why I gave you a little bit of backstory on Hyundai and where they are today. Also remember, India's one big focus on the big project side is semiconductors, with at least 2 big projects on the anvil. Now, the biggest attraction to Tesla, I feel, is mystique, mostly that of Elon Musk. After all, people liken Marvel hero Iron Man to Musk. No one thinks of the founder or son of the founder of Hyundai in the same vein. Shaking hands or greeting Elon Musk is something that most people, including heads of state, would want to do, even if some don't like the way he runs Twitter. I for sure would like to interview him, maybe going back to his first principle approach to rocketry and cars, not quite Twitter. So the larger question is, can a Tesla galvanize other investments into India? At this point, that is not quite clear to me. Unlike mobile phone manufacture, where Apple is a giant magnet in moving production around the world, including to India from China, all the other major automotive companies of the world are already in India or have already been here and run away, like Ford and General Motors. More importantly, they're all racing ahead in electric car manufacture. Even Elon Musk remarked that Hyundai was doing quite well in July last year when it emerged that Hyundai had captured a 9% market share in contrast to Tesla's 75% at that time. Now, the Gigafactory as a battery maker or other power systems can be a driver of sorts, though that will require, as will many other investments, a very modern and reliable supply chain which is only now coming into place. One location for the Gigafactory that's rumored is Tumkur in Karnataka, which generally makes sense given other infrastructure around the place, including, of course, in the automotive space. But that is a rumor. As far as facts go, Elon Musk did call himself a fan of Mr. Narendra Modi and said that India had more promise than any large country in the world. He, that's Mr. Modi, really cares about India because he's pushing us to make significant investments in India, which is something we intend to do. We're just trying to figure out the right timing, he told reporters. I am confident that Tesla will be in India and will do so as soon as humanly possible. Incidentally, commercial space also came up in the meeting between Prime Minister Modi and Elon Musk. And this is an area, particularly reusable rockets, India can surely benefit from and look forward to learning more about and, of course, implementing over time, considering that we have a space mission. Stock markets surged to all-time highs. Indian stock markets closed at record highs on Wednesday thanks to sustained flows from foreign investors. The 30 stock BSE benchmark Sensex hit a fresh all-time high of 63,588 before closing at 63,523, up 195 points in a rally led predominantly by banking, financial, and information technology stocks. The previous high was 63,583, hit on December 1st, 2022. The broader NSE Nifty surged 40 points to end at 18,857, but not before hitting 18,875. The market capitalization of BSE-listed firms hit a fresh all-time high of 294.49 lakh crore rupees in Wednesday's morning trade. Now, more interestingly or significantly, the top 5 stocks that lifted the Sensex in this period were ITC, Tata Motors, Nestle India, Larsen and Toubro, and Ultratech Cement. ITC and Tata Motors were up 33% in this period from December, by the way. The others were much behind. You may recall my talking about ITC a day after its results, week before last, and the big bet valuation guru Aswath Damodran had taken on the stock in a conversation with me in 2020. Now, at the peak, the air thins out, and it can get a little lonely too. So, how's it looking for the next few months? Remember, most institutional investors have been betting on strong earnings growth powering the markets for the next year or two. Does that outlook still hold, or are there some storm clouds, quite literally, on the horizon? I spoke with market veteran of many cycles, G Chokkalingam, founder of Equinomics Research, and began by asking him what he was looking at and out for.
Yeah, till 3 weeks ago, I was extremely bullish on the market in the short term. I was hoping that the rally would continue till November, or rather till the states elections are held in place like MP and all. But last 3 weeks is really a cause of concern, particularly on monsoon side. On economic parameters, as I highlighted last time, there are a lot of comfort, except the goods exports and the FDI inflow, which has decelerated. There are a whole list of macro parameters which are turning favorable. But monsoon is a cause of concern because as of yesterday, deficit in the cumulative rainfall has been 33% as compared to long-term average. And then out of 36 meteorological subdivisions, only 11 subdivisions have received normal or above normal rainfall. Of course, we do understand that agriculture sector accounts for only 18% of the GDP. Out of that 18%, also 5-6% is fishery and forestry. And in the balance also, around 12-13%, you have 4-5% irrigated land. So the impact of monsoon on the GDP will not be very big. It can be 50 basis point or 60 basis point. But what is worrying me is the sentiment, then the inflation, and then the rural demand, which is not doing so well. Many people have acknowledged on the rural demand. Now, sentiment is more important because today the market cap of all listed stocks on BSE is about 294 lakh crore, and 1% of is around 3 lakh crore rupees. Half a percentage of the entire market cap is about 1.5 lakh crore. If there is a sentimental setback due to the monsoon, people rush to sell even 0.5% of the total market cap. There is no appetite in the market. So that's why we fell more even when the US had a problem so this is my single most concern. So I would suggest caution and generating 5 to 10% cash in the equity asset allocation.
Right. Now, in the last month or so, many analysts have put out reports basically focusing on earnings and pointing to earnings growth, particularly of those companies who are not affected either by exports or by other factors to do with consumption demand, which is strong. What's your sense? Does that change?
Certainly change because see, if you take a pockets of index, whether it's a large cap or a mid cap, small cap, in this rally, many have lost the valuation comfort. So, because the rally in the last 2-3 weeks, individual stock is a phenomenon. So, one is the valuation comfort, and second, definitely, there are many sectors which depend on rural segment like FMCG, two-wheelers, even low end of cars, tractors. So obviously you have to account for all this. And secondly, according to me, investing in equity market is both arts and science. And today, the role of fundamental is only 30-40%, 60% is more of perception. That's what creates a wealth or destroys the wealth. So the day that changes because of the sentimental impact of adverse monsoon performance, earnings already has taken a backseat in the last 10 years. BSE took 145 years to create a 4.5 crore investor base. As I am speaking to you now, it's around nearly 13.5 crore. In my sense is that at least 9-10 crore people are new people, and majority of them do not look at the valuation. They go on momentum in stocks only matters. So therefore, earning according to me is necessary, not sufficient, and it will take a backseat if there is any sentimental impact, big dent in the market due to poor monsoon. And if this poor monsoon continues even for 3 weeks, it is going to create a major problem because your sowing season is already affected. Another 3 weeks, if it is delayed, it's going to be a terrible impact.
You're saying that the sentiment impact is what we should worry more about. Earnings could drive valuations, but momentum is what matters more. And therefore, people will respond to momentum and not the intrinsic earning capability of a company, even if that is good through this difficult period. So let me ask you the flip question, Choka. What if the monsoons were to arrive any day now? I mean, we are seeing irregular patterns in rainfall in any case, and things even out in the next 3-4 weeks.
It will be a phenomenal. Till November, we can expect another 10% rally in the market. The market cap, which is 295 lakh crore, it can become even 350 lakh crore. Very much possible. Because what happened, as I mentioned, every week, minimum 5 lakh new investors are coming into the market. And this is a trend for last 2 years, almost consistently. So what was lacking was the confidence. But there were investors, but the lack of confidence. That's what we saw in March meltdown in the many small and mid caps. Now, as you are wishing, and that is also my wish, because all of us will be impacted. If rainfall turns out to be good, till November, there is nothing to worry. The market will be fantastic. The only concern whether there is any possible war in Taiwan or any other part of Asia. Otherwise, till the major states go for elections, I think the rally will continue. It will be one of the best rallies which we can ever imagine.
Right. And like always, maybe we can hope that we end up in a situation that is somewhere in between. It's neither a bad one or too good one. Okay, Choka, thank you so much for joining me.
My pleasure.
Airlines go on a buying spree. What's next? In the last 2 days, two airlines, Indigo and Air India, have cemented or freshly ordered close to 1,000 aircraft, including the latest lot of 500 A320s. Indigo now has a total of 1,330 Airbus A320 aircraft on order. Other airlines are also ordering aircraft, though in smaller numbers. Vistara, which is effectively Air India, is also ordering about 10 aircraft, so is Akasa Airlines, and so on. But the bigger question is, with so many aircraft lining up to land in India, where do things stand? At least looking at the next 6-7 years, because who knows about life beyond that? More specifically, where do we stand on capacity in terms of airport infrastructure? And where do we stand, more importantly, on projected demand for all of this in India? To discuss this, I spoke with Kapil Kaul, CEO of airline consulting and research firm CAPA India. I began by asking him how he saw these big orders playing out on Indian skies as and when the aircraft begin to arrive.
Okay, so first of all, the order book of Indigo currently stands at roughly about closer to 990 aircrafts, 500 that they have signed a couple of days back, and prior to that, their outstanding order was roughly around 490 odd. So you can roughly say they're closer to 1,000 aircrafts in order for them. Air India is 470. Akasa has about 54 odd aircrafts. They have ordered 4 more. So roughly, I think our fleet on order is about 1,500 plus. I am not counting the Go Air order. I am not counting the SpiceJet order. We treat them under suspension for reasons that is you're aware. So roughly, we have about 1,500 aircraft order. For Indigo, this 1,000 aircraft order is going to take them right up to FY35. So that's number one. Air India order is roughly, I would say that they may need to do a follow-up order in a couple of years, because out of the current 470 aircraft, a couple of hundred aircrafts will be for replacement. So they would need to order more, but 470 would take them right up to FY30. And Akasa is going to possibly till next couple of years, and then they will order again by the end of this year. So I think out of these 1,500 aircraft, most of them are not going to come in next 5-7 years. Some of them are for replacement, both at Air India and Indigo.
Air India, for example, is ordering 10 777X and 40 A350s.
Yes, they have multiple wide-body aircraft. Narrow-body are between 320 family and 737 family. So what we are expecting out of the next, let's say, 5 to 6 years, we're expecting the aircraft fleet size from current closer to 700, it's probably 684 now, to go up to about closer to 1,400. So we are expecting about 700 aircraft ordered to come in. That now takes us to, do we have the infrastructure in place? The metro infrastructure is more or less in place. You would have roughly about 100 million plus capacity available currently, immediately. And the structural capacity at the metro airports is in excess of 500 million. And I'm not counting the Chennai Greenfield Airport into it, but minus that, we are roughly around 500 million structural capacity to the metro airports. You at Adani airports, they will touch roughly about, my assessment, 175 to 200 million. So overall, I think next 5-7 years, we have adequate capacity, though you will still see the peaks and super peak slots getting constrained at metro airports. But broadly, I think the metros and the Adani airports will have capacity for next 5-7 years. The challenge would be at the Airport Authority of India airports, whether they have the adequate capacity to take care of this growth. So capacity wise, we are more or less okay. As for demand is concerned, we expect the demand to be in line to accommodate these 700 planes. To answer your question, the aircraft size of India will move from 700 to 1400, roughly it closes, so they'll double in by FY30 end. That's our projections. We would expect the demand to be 15% plus CAGR, both domestic and international. The capacity at our Indian airports is sufficient at metro and the Adani airports. And the structural capacity of the metro airports is in excess of 500 million. The challenge would be at non-metro airports of AI. Broadly, I think we seem to be fine as far infrastructure is concerned. We seem to be aligned as far the demand is concerned. We seem to be aligned that the two main airlines will have majority of this order book is from the main airlines. They have the balance sheet, ability to invest more cash, intellectual capital to go through this massive transition. So we seem to be in order as far the current status is concerned.
And the non-metro airports, do you have a number, for example, which would suggest how much traffic could potentially go to these non-metro airports or smaller airports, which are coming up and more of them are coming up, and where the capacity constraints could be?
I think the capacity constraint would be with Airport Authority of India airports, and we would expect that 50% plus of the traffic would move to non-metro airports. The concerns would be there at the AI airports, whether they have enough infrastructure slots to be able to accommodate this traffic. Even for FY winter summer schedule of FY23, the challenges with respect to the slots at the Airports Authority of India airports were visible. But overall, I think minus the AI airports, I think we seem to be in place to manage the growth up to FY30 or possibly beyond.
Right. And last question. So this is the positive projection. I mean, for some reason, if things don't go this way, what happens then?
Well, the challenge primarily would be that there are other challenges that the airlines would face, which are pilot-related challenges, people-related challenges, managing this transition from 700 to 1400 in a relatively shorter period of time. So those challenges would remain. The challenges of how the market would behave, are we going to see any major economic challenges which will put pressure on them? Excluding those challenges, I think we are good for the next 5-7 years. And I say it, Govind, because of two reasons. We have a strong, stable airline system after a very long time. Two principal airlines have 85% market share. They have 1,000 aircrafts, almost about 1,500 aircrafts between them. Air India is investing few $1 billion into Air India's restructuring and turnaround. Indigo has about 12,000 crores of free cash, overall more than 20,000 crores of cash. And they have the ability to raise more capital. So I think we are fundamentally in a very positive spot after a long time, largely driven because the concentration is with these two carriers.
I think it's an optimistic note to end on. Thank you so much, Kapil, for joining us.
Thank you very much, Govind. Thank you.
Some real estate news. If you are house hunting, maybe you need to hunt faster because the market is evidently going to be buzzing this year too. Residential real estate across the top cities of India, Mumbai, Delhi, NCR, Bangalore, Pune, Kolkata, and Hyderabad, are expected to clock about 8 to 10% sales growth this fiscal year, that's this year, according to a report by rating agency CRISIL. By the way, as we spoke in an earlier episode, housing prices across the top 8 cities in India increased 8% year on year thanks to strong housing demand supplemented by what the construction industry claims is consistent quality launches by top developers. Now, the highest rate increase, just to remind you, in residential prices was in Delhi at 16%, followed by Kolkata at 15% and Bangalore at 14%. Mumbai is the only city where prices did not go up and actually went down in the last year. But then rates here are an average square feet price of 19,219, almost double of the next highest city in India. And some sad news. Sylvester DaCunha, best known as the creator of the iconic Amul girl, is no more. The Amul girl made her debut in 1966 wearing a frock with red polka dots paired with matching ribbons and red shoes. Legend has it that Amul Butter's tagline was just purely the best. But DaCunha's wife Nisha added utterly Amul and then he added butterly to make it utterly butterly Amul. Jain Mehta, managing director of the Gujarat Cooperative Milk Marketing Federation and owner of the Amul brand, put out a message expressing grief, saying the Amul family joins in mourning this sad loss. That's it from me. Have a great day ahead. Do share this podcast if you like it with friends and family and write in with any feedback on govindraj@thecore.in. Thanks again. This was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter at www.thecore.in. That is www.thecore.in, or follow us on LinkedIn, Twitter, and Facebook as well. Now, we would love your feedback on how we can make business more interesting and relevant to you, including our reporting on India's vibrant manufacturing sector. Write to us at feedback@thecore.in. Thank you for listening.